Last week, the euro was the strongest moving currency. Non-farm payroll numbers came out above expectations. And why was the New Zealand dollar the weakest currency? Let's talk about it here at Capital Markets. Traders, guys, I am excited to have you back here at Capital Markets. It's your host here, Cleveland Bishop. Hope you guys are having a fantastic week so far. All right, we're moving over into April week 2. April week 1 is a wrap, and we're going to be giving you guys the fundamentals and the technicals. All right, so guys, make sure you like and subscribe. If you guys ever have any questions regarding some of the content that we're talking about here on the channel, comment down below, folks. We will love to answer away. All right, so here you guys go, a screenshot of the Euro GBP. You guys can see a massive amount of consolidation. What does that mean? Well, we do know that the pound had some strength last week, but that also means that Euro had some strength as well. Why did the Euro have a little bit of strength? Well, we did see a little bit of an increase when it came to Euro area CPI. That maybe drove the currency to start to push a little bit higher. We do know that right now the interest rates are still fairly negative, but we have stopped the quantitative easing that have kept rates so low. Remember what they're trying to do, folks. They're trying to increase monetary velocity. That means the amount of money fluctuating around in an economy. All right, that's going to be really important to start to increase spending, increase wage growth, and increase prices for consumer products. That's what we're waiting on, and hopefully we can see that come to fruition. All right, we did get an extension when it comes to Brexit. Well, at least the UK asked for an extension. They're likely going to get it. This is going to be the third extension. Remember, March 2nd was the original deadline. All right, we're now moving over into middle of April, and we have yet to come to an agreement. What does this tell me? This tells me that there is likely not going to be an agreement when it comes to Brexit. All right, so we're assuming, and most market participants are assuming in some capacity, that there is not going to be a vote. And if there's not going to be a vote, you're going to see a massive increase in it when it comes to that pound. Okay, we do know that right now the pound is still off of its highs by about 12%. At one point, off of its highs by 29% in 2016. That still means that there's a pretty massive opportunity to catch some of that upside move. But of course, you guys are going to have to be very focused and very aware of what's going on, and make sure you have your capital markets brokers handy and ready to take those positions. All right. Last week we did have an NFP number that came out for the dollar. 196,000 jobs added, a little bit above expectations, and that's good. And that turned out to be good for the dollar as well. The dollar did end up beating out on its April and its March highs, and right now we're still sitting on the dollar index somewhat near those highs still. Now again, remember that euro is pegged by 53% of that dollar index, so we still need to see a little bit of euro weakness before that dollar index starts to hit back at all-time highs. All right, lastly, I want to talk to you guys a little bit about that New Zealand dollar. So much happening when it comes to trade war negotiations with Trump and China that gave so much weakness originally to the Australian dollar and the New Zealand dollar, but some things are obviously changing up a bit. We still did have a decent amount of New Zealand dollar weakness last week. Aussie, on the other hand, is turning around a bit, so we're seeing that there's a confliction here, right? We're not getting the same price movements when it comes to that Aussie and that New Zealand dollar, and we know that when it comes to trade, those should be very correlated, but right now they're not. That just means that that New Zealand dollar is actually feeling the effects of a troubling economy. They are seeing some wage growth shrink just a bit, just on those Q1 numbers, and so that's what drove the currency to the downside just a bit. All right, hopefully we can see that currency turn around a bit. That might be an awesome opportunity to catch some type of pullback. All right, so guys, what's even more important is where you're trading. All right, all these moves are taking place every single day. There's a massive amount of opportunity, and if you guys are not with the right broker, you're going to be missing out on those opportunities. Maybe because you can't withdraw capital, maybe because you can't deposit capital. There's many different variables that when you work with bad brokers will come into existence that's going to slow your trading down and really put you at a bad place when it comes to trying to achieve profitability. I suggest you guys head over to capital-markets.com. We're one of the top brokers in the entire industry. We route from some of the best liquidity providers, and we also have extremely tight spreads. All right, tight spreads means you're gonna be paying less and less per trade. Liquidity providers, those are the guys that give order flow into the broker, and folks, we go from the best. All right, so that means for you guys, very little slippage and very little latency. All right, head over to capital-markets.com. I'm gonna see you guys tomorrow.